Let's take the market conversation forward. Kunal is, I beg your pardon, Nooresh and Vishal Malkan join in on the show to talk about exactly that. Nooresh, hi, afternoon. Let me begin the discussion with you. Consolidation, do you see the range expanding anywhere, even on the upside or downside?
So the consolidation continues and keep seeing one day when the Nifty outperforms the small cap. When the one day the Nifty does well, the small cap takes a break. Today the Nifty is taking a break. Small caps and the mid caps are doing well. So overall the breadth remains strong, and the momentum continues. So we are still in that consolidation for a day or two on Nifty as of now, but the trend is still pretty positive. Bank Nifty continues to look more interesting than Nifty, given the fact that we are seeing fresh breakouts in a lot of heavyweight banks. So overall, the bias remains positive. It's a buy on dips market, but dips would be a little difficult, it seems.
Yeah, so that's a buy on dips market. Let's see how it goes. But Vishal Malkan, what's your view on the banking index specifically? Showing quite a bit of strength. Last week, HDFC Bank was outperforming. RBL had a good run. It's clearly continuing, at least at the index level today.
Yes, I think banking is in the limelight in the last few trading sessions with making new highs on the bank Nifty as well, making many of the stocks which we can see multi-year highs are getting breakout levels. So I think the best levels for bank Nifty from here, it may correct. Maybe even a 300-400 or a 500 point would not be a big correction, less than 1%, but that will give some kind of a breather for people to get into it because it's totally like new high. And the most thing about common people or common traders, like I'm buying at the all-time high, so let me wait for a correction. So having one red candle or a one black day is going to be healthy for the market, as Nooresh mentioned that buy on dips is the thing. And if as far as stocks are concerned, I think RBL Bank is the winner for today, and that would be the best pick because it's a good volume breakout today. And looking at new highs, further highs in this stock, at least around 300 levels should be there in the next few trading sessions.
Right, let's talk individual stocks as well and trends in the market right now. And Nooresh, I guess you can't take your eyes off from what GMR Infra has been up to ever since that GQG investment, another 6% higher. Do you see any dip or any consolidation coming in the stock? Because I bet a lot of hands are waiting on the sidelines for that dip.
So I would not expect a major dip given that the volumes were the highest ever. And then we've seen follow-up also today. So ideally, there has been no fade-off even today. So in that case, we get into a consolidation rather than a dip. And that makes it difficult to trade because at 73 odd levels, when the stock was at 60 just a day back, it's been a 20% move from the lows of that day. It's tough to take a fresh bet with the same with the risk reward going way off. So for now, the viewers expect some bit of consolidation, maybe 70 to 75, and then maybe after a couple of weeks, again look at it as a fresh trade. But if one has bought into the stock before, the trend remains extremely positive.
View on the pharma names, Dr. Reddy, should one put their hands into trade right now, given it's seeing quite a bit of slide? And what about the other ones? Walkout, for instance, is high by 12-13%. Is the momentum likely to continue there? Vishal, the question is for you.
Yeah. Okay, I'm looking at Walkout right now, comparing to other farmers which are having a dip today, but Walkout is doing really well. And it has given a breakout about that level of 360, 70, which was the high recently. So I think there's further upside there, and we can look at, especially the volumes are good. So we're looking at a new high around 400 in the next few trading sessions. And as far as the other farmers are concerned, I guess Oro Pharma is one stock which I would like to recommend for buying on dips. And around 1000 level, there's an important support, which is where it is reaching now. So Oro Pharma is a good bet for a target of 170 with a stop of 980.
Pharma is coming as a call. OMCs, of course, are cracking hard. We will pick up on that story as well in just a while from now. But Nooresh, you think they can be shorted further? HPBP, both down about 4 to 1.5%?
Not really. Actually, the case is you want a little more dip to look at an entry point here. Both these names have given structural breakouts in terms of multi-year. So if you look at HPCL, the stock used to be 330, 350 levels back in 2019 and then in 2021. So that's a huge breakout for the stock. So you want to be buying closer to 330 odd levels, 330 to 340 zone as a dip buy. So a little more to go and you get there. Same way, if you look at a BPCL, the stock has given a big breakout above the 400 mark. And in the current move, the stock has already moved up to 480, but the last big tick or a gap was around 440, 45 levels. So that's a price point which should hold on. So one should be looking at a buy on dips from here on or accumulate on the OMCs as such. And even ONGC looks promising, which is not exactly in the same sector, but the whole sector looks pretty promising. It's a buy on dips in HP and BP.
In fact, quite a few other public sector entities are actually doing well. IREDA, IRFC. You also have names coming like FACT as well as Rail Vikas Nigam, RITES, NLC India. All of these public sector entities are holding up. And then the other pocket which is doing all right is the renewable energy space. So Inox Wind, partly on account of that initiation from ICICI Securities, is holding up. Sterling Wilson Solar, I think they bagged another order. So that's the reason that stock was in focus too. But let's take stock of what's on the losing side. You have, of course, Dr. Reddy's, which is down. You have OMCs, and then Maharashtra Seamless is the other one. Safari Industries is coming under pressure. And then Canfin Homes is the other one, which is down and out. But interestingly, while Indian markets are holding up okay, if you look at the European markets right now, they are slightly under pressure, and the US futures for now do suggest a bit of a downtick. So good time then to get the global perspective on how India stacks up versus the rest of the emerging markets. We actually spoke with Jonathan earlier in the day to try and understand how the outside world is actually looking at India and why it is one of the top bets right now. Listen in.
India is our largest overweight. It's a market that we have preferred over the last 2+ years, and we're certainly going into 2024 bullish. I think the rationale for that is superior GDP growth, nominal GDP growth of probably 12 or 13% over the next couple of years, and superior earnings per share growth. If you go back to early 2021, so I guess sort of 3 years ago, India's earnings per share have compounded to the extent of 60% in US dollar terms. That compares with essentially zero for overall emerging markets and minus 20% for China. And so this ability of Indian companies to deliver sustained earnings growth is extremely important for our bullish recommendation on the market.
Okay, on to another ET Now exclusive, and this is a big one. We've learned from reliable sources that Jammu and Kashmir Bank will soon be launching its QIP. For more, my colleague Cheryl D'Souza joins in. Cheryl, what are you picking up from your sources?
Well, Aisha, what I'm picking up from my sources is the fact that J&K Bank is in the final stages of actually going ahead and launching its QIP. We could see the QIP relatively soon. Remember that the J&K Bank already got an approval to raise up to 750 crore rupees. This approval they secured in the month of July. So we are expecting the QIP to be launched soon. What analysts are also mentioning is the fact that with 750 crore rupees, which the bank will likely raise, it will actually go ahead and benefit their CET1 from about 11.4% currently. You will see an uptick of approximately 90 basis points, taking it to about 12.3%. Also remember that Jammu and Kashmir Bank actually raised about 90 odd crore rupees in the QIP last time when they raised it in the month of April 2022. What we're picking up right now from the sources is the fact that final stages are underway when it comes to launching its QIP, and already has an approval about 750 crore rupees that they are eligible to actually go ahead and raise. We did write a mail to the J&K Bank, but they have not responded as yet to ET Now's queries. What analysts are also saying that Jammu and Kashmir's GDP growth is likely to improve, and that therefore will go ahead and also benefit J&K Bank. Remember that J&K Bank actually has about 61.6% market share when it comes to Jammu and Kashmir's banking business. So what we're picking up right now from the sources is the fact that J&K Bank is all set to go ahead and launch its QIP anytime soon.
Very interesting. Thanks so much for that, Cheryl. So looks like after Bank of India, which got a massive subscription of almost 4.11x, it's now time for J&K to rack in the money and bring that growth capital, and the stock is actually reacting quite positively. It's sitting with a gain of around 8.5%. That after the entire PSU index being high by almost 1.5–2%. So J&K Bank participating in that rally, and this is the exclusive that we are bringing for you, that a QIP might be announced real soon, and given the appetite we are seeing in the market, it might see good subscription as well. But time now to take a breather on the show. Don't go anywhere. When we come back, we discuss a lot more of stock ideas with our battery of guests.